This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Massive turnaround. The Dow plunges more than 200 points only to reverse course and stage a stunning comeback.
Sunday's summit. Germany's Merkel is demanding even more from Greece as that country's creditors schedule another high-stakes meeting this weekend.
Held hostage, the multi-billion-dollar industry that's based on fear, risk, and hope. Tonight, a special report on the big business of ransom. All that and more tonight on Nightly Business Report for Tuesday, July 7th.
Good evening, everyone, and welcome. What began as a sell-off turned into a rally. Stocks reversed earlier losses in a choppy and volatile day of trading. And what triggered it was exactly what dragged it down earlier: oil prices. Crude pared its losses, and that commodity climbed, and so did stocks. At the close, the Dow Jones Industrial Average was 93 points higher. It had been down more than 200 points. The Nasdaq rose 5 points, and the S&P 500 gained 12 points. Mary Thompson is at the New York Stock Exchange with more on today's dramatic turn.
A remarkable turnaround on Wall Street Tuesday. The Dow recovering from a 200-plus point decline, finishing up 93 points. That marks its biggest one-day reversal since October of 2011. The market's rebounding after the European markets closed, indicating heavy selling from those investors weighed on U.S. stocks in early trading. Oil, which finished lower, did close off its worst levels of the day, and that recovery helped to support stocks, as did the performance of the S&P 500. The index falling below a key technical level, its 200-day moving average during the session. It then recovered, though, to finish above that level, helped by what traders described as broad-based buying that was seen later in the day. Still, investors took a decidedly defensive stance as they await news from Greece on Wednesday, the start of the U.S. earnings season. That's when Alcoa reports, and of course, any more signs that the Chinese government's efforts to stem a slide in its stock market are working. The groups that led the markets higher in Tuesday's session: utilities and consumer staples. For Nightly Business Report, I'm Mary Thompson from the New York Stock Exchange.
Though oil prices may have pared their losses by the close of trading today, they still fell for a second straight day. Gold prices also tumbled, and copper off more than 3%. That's because the commodities markets are still very wary of what's going on in Greece and maybe even more in China. Jackie DeAngelis reports.
Concerns about Eurozone stability and market volatility in China sending investors fleeing from energy and metals. A crucial part of the story is dollar strength. With other currencies weakening on the back of the turmoil, the dollar continues its rise. Commodities like oil, gold, and copper are all priced in dollars, which makes them more expensive for traders using other currencies.
Well, I think the situation in Greece is what everybody was looking at, but it was a political situation where nobody really wins. So the only one real sure thing out of that situation is a stronger dollar that had a lot of impact on all the markets.
The dollar most definitely a factor in increased selling pressure in crude. After logging its second steepest loss this year yesterday, oil sold off again today. Traders tentatively eyeing the nuclear talks with Iran extended again as a sign that genuine progress is being made, which could bring that country's oil back online.
I think the sell-off in oil had to do with fundamentals. For a long time, we were strong based upon, I think, fear in the market, what we had going on in Syria. All I think is supply and demand finally caught up with itself in the sell-off.
And a double-digit loss for gold on the day. The precious metal no longer considered a safe haven in times of turmoil, feeling the pain from the dollar index. Copper down 10% this month. It's an indicator for how the market feels about global growth and China specifically. Its sell-off shows that confidence is weak. For Nightly Business Report, I'm Jackie DeAngelis.
And as for that volatility in China, stocks in that country fell once again, despite those emergency measures that we told you about yesterday. The Shanghai Composite is made up of shares bought and sold largely by retail Chinese investors, and it fell to fresh bear market lows. Stocks are now off more than 27% there since their highs of mid-June.
Well, more now on Greece, where after a 4-hour summit of Eurozone leaders, there is still no deal, little progress, little time left to agree on one. What they did agree on was to meet again on Sunday as the demands on Greece intensify. Jeff Cutmore has the ever-changing play-by-play from Brussels.
The bottom line on this leaders' summit in Brussels is that we still don't have an agreement. The German Chancellor Angela Merkel left saying that there are still not enough proposals on the table for there to be negotiations. Now, it's hoped that over the next couple of days, Greece will come back with something fresh. The German Chancellor wants the time at least to take that through her own parliament. Right now, plenty of commitment to the Eurozone, plenty of talk about the importance of keeping Greece within the Eurozone, but right now it's not clear that Grexit can be avoided. We will find out more over coming days, and definitely that emergency leaders summit that will take place on Sunday will draw this issue to a close. This is Jeff Cutmore for Nightly Business Report in Brussels.
Meanwhile, in Greece, the economy continues to grind to a halt as banks remain closed and small businesses struggle to transfer money and conduct operations. Michelle Caruso-Cabrera has more from Athens.
Tourism is the single most important industry in Greece, providing more than 20 billion euros in revenue last year. July and August, the peak of the season.
This is the period where I should say that everything is going fine. We're in the middle of July. Things are in a period where everything should be running well. It's quite the opposite right now.
Alex Angelopoulos is on the board of directors of the Hotel Association and says cancellations are rolling in.
Because we are in the front page of every newspaper in the world. I'm really hoping this is not going to last for very long.
But businesses of every kind are suffering. The banks have been shut for more than a week, and although online banking is permitted inside Greece, no one is permitted to transfer money outside of Greece, meaning business owners can't pay foreign suppliers. Costa Kanaroglu is the CEO of Kana Laboratories, which distributes pharmaceuticals and manufactures products like antibacterial soap. He needs to purchase materials and products from overseas.
The fact that we can't transfer money is creating some issues with our providers. We import a lot of products, we import raw material, and although a lot of our partners have given us some space to breathe, if this goes on for longer, it's going to become a real issue.
The crisis, which started in 2009, has been very tough on the company. 5 years ago, revenues were 60 million euros a year. Now they've fallen to only 25 million.
I haven't been sleeping okay in the past 5 years, to be honest.
Even internet companies based in Greece are having a tough time. Manolis Nikforakis, the founder of a weather website, hosts the site on servers in the United States.
You need servers on the cloud, like Amazon, Google, Microsoft, Rackspace, this kind of infrastructure. In order to rent these machines and deploy your software, you obviously need to be able to pay them.
But right now, he can't. Unemployment in Greece had finally started to improve late last year. But this banking crisis threatens to undo all the progress that's been made. For Nightly Business Report, Michelle Caruso-Cabrera, Athens, Greece.
Now to the U.S. economy. The U.S. trade deficit widened in May because of a drop in exports. That could heighten concerns over weak overseas demand and a strong U.S. dollar. The difference between imports and exports grew to $41.9 billion, which was a little bit less than expected.
Job openings remained at a record high in May. According to the Labor Department, the number of open positions rose 16% when compared to the same period last year. But the report highlighted the growing split between openings and hires as the number of filled positions fell. And that could be a sign that employers are having trouble finding qualified candidates.
The International Monetary Fund warning today that if the Federal Reserve raises interest rates too early, the central bank could risk stalling the U.S. economy. This is part of the IMF's push to put off a hike in U.S. interest rates until 2016, saying there's still too much uncertainty around, hovering specifically around inflation, employment, and wages for the Fed to pull the trigger.
A hostile bid in the pharmaceutical sector. Ireland's Horizon Pharma is bringing its $3 billion takeover offer for Depomed directly to its shareholders. This after Depomed rebuffed Horizon's attempts to negotiate. Horizon manufactures drugs to treat arthritis and rare diseases. Depomed focuses on products that treat pain. The takeover attempt is just the latest in a number of deals in the drug industry. Shares of Depomed soared 38%. Horizon fell about 2%.
Meantime, health insurers lower today on antitrust concerns just a couple of days after Aetna and Humana made their merger official. Cigna, Anthem, and United Health, which are the subjects of merger speculation themselves, all finished lower along with Aetna and Humana. Mergers and acquisitions worldwide now are on a pace for one of their best years since before the financial crisis. According to Deal Logic, more than $2 trillion worth of merger deals have been announced so far this year. And while that may be good for investors and good for Wall Street, is the same true for consumers and Main Street. We're joined by Diana Moss, who is president of the consumer advocacy organization American Antitrust Institute, and Adel Anslali-Farr, who is a partner at Latham & Watkins law firm. Welcome to both of you. I appreciate your being here. Adel, let me begin with you. There are a lot of industries, from insurance, where the big six may go down to the big 3 or 4, in cable television, where the dominant players are going to control 50 or more % of broadband if some mergers go through, airlines, where the big 4 control 80% of the marketplace. Why shouldn't consumers be worried that this is not good for them, even though it's very good for the CEOs who pull these mergers off?
Well, I guess let me first begin by saying I'm not necessarily sure that it's good for the CEOs that pull them off. One of the things that I think
the Time Warner cable CEO stands to make about $100 million for selling the company.
Sure, but I think on the acquiring side, one thing that I think people need to understand is that certainly trying to pull off a major transformative type of acquisition is a very, very big proposition for an acquiring company's CEO and board to go down the path of. And while it could be a success, it could also turn out to be something that gets them turned out of office pretty quickly. So I think one of the things that's driving the M&A activity that we're seeing is increasing confidence of executives, CEOs, and boards, and that's really the driver. And I think the concern of consumers is certainly addressed by the regulatory frameworks that we have in place. And you're seeing just as much in the news today, regulatory agencies, the U.S. regulators, suing to block deals as you are at any time in the past.
Diana, why don't you weigh in on that? Because yes, we have seen some deals blocked, but we've also seen an enormous amount of consolidation. And there are those, I think you're one of them, who feels as though that really reduces competition and also the quality of service.
It does. And we have seen a tremendous amount of consolidation in the last 20, 25 years. And that's been largely due to lax merger enforcement and a lot of mergers being passed through on the basis of claims that these deals will reduce costs and those costs will be passed on to consumers. And we're just not seeing it. We're seeing huge consolidation in key industries, in healthcare, in airlines, in food. And yes, we are seeing more challenges by the antitrust authorities, but the consumer is getting lost in this feeding frenzy, in this shuffle of tremendous consolidation. The number of competitors is down to 2 and 3 major competitors. That limits the consumer's choice. We've now seen evidence of price increases post-merger. Quality is certainly a key issue, especially in big mergers where privacy is important. And we're very concerned about the effect on consumers and also, frankly, the effect on competition. So when you have just a few competitors, it stifles innovation and entrepreneurship.
Ms. Moss has given you much to respond to, Mr. Aslani. Why don't you just go ahead there?
Well, look, I think part of the issue is that, especially today, in what I think we would all acknowledge is an increasingly global economy, I think it's very difficult to ask companies, certainly in this country, to continue to grow and to be competitive on the necessary global platform without M&A as a tactic for delivering that growth, be it either in terms of product offering, which consumers are the ones that are calling for.
But let's take the example of the health insurance companies. They are not global concerns. They are competing only within the United States. Cellular telephone companies and the cable companies, basically the same. They're not. I take your point. in the world of finance potentially, or in the world of pharmaceuticals, where they are really global enterprises. Maybe even in the auto business, where a big proposal from Chrysler to merge with GM has been floated out there. But the ones, a lot of them are not, it's not a question of global scale.
But it is a case of increased scale from the historical roots of those businesses. To say, take cable, which was essentially a very local enterprise in its beginnings. The national platform today is what I would call the necessary global expansion of cable. And so as the market reach has increased, because consumers are demanding more and more products, services, and access as part of the product offerings of companies, companies need to grow. And it's the basic calculus of, do you buy or do you build it? And in some cases, it's just not feasible to try to build it yourself. And buying it is the course of the path of least resistance and greatest value delivery.
Diana, very quickly, final word.
Yeah, I would debate that premise. I think a lot of the expansion is driven by the desire of firms to be larger, not necessarily by consumer demand. And a lot of these scale economies and scope economies are not, in fact, being realized. And markets are, in fact, smaller in some cases. And the question is, are we going to promote globalization and internet and growth on the backs of the American consumer in terms of higher prices and less choice?
Fascinating conversation. We could probably spend an hour on it. Alas, we can't. Ms. Moss, thank you very much. Mr. Eslani, appreciate your being with us as well.
Thank you. Thank you.
Thank you.
And still ahead, crafting the perfect pitch to the world's largest retailer, what one small business owner is doing to get its products on Walmart's shelves.
We begin Market Focus tonight with a licensing agreement between Allergan and Merck. The Botox maker will buy the exclusive rights to two of Merck's experimental migraine drugs for $250 million. Merck could also receive royalty payments. Allergan was up a fraction to $307. Merck also up slightly. It finished at $57.99. Gaming and Leisure Properties, which is a company that leases real estate to casino operators, upped its hostile bid for Pinnacle Entertainment's real estate assets. The offer values that firm at about $5 billion, including debt. Pinnacle hasn't publicly rejected the company's offer and says it is reviewing the current proposal. Gaming and Leisure down 2.5% to $35.72. Pinnacle up nearly 6% to $39.64.
A rare sell rating sent shares of Shake Shack sliding in today's session. Morgan Stanley downgrading the stock, writing that it is simply overpriced. Separately, the company debuted a chicken sandwich today, but it will only be available in Brooklyn. Shares tumbled 7% to $54.74. And Carnival is setting its sights on Cuba. The cruise operator gaining U.S. approval to travel to the country, but it's still waiting to get the okay from the island nation's authorities. Shares of Carnival were almost 2% higher to close at $50.20.
Gotta go to Brooklyn for that sandwich, Sue, I tell you. All right, Hostess says don't expect an IPO anytime soon. Reuters had reported that Hostess brands whose snacks include Twinkies, you can get them in Brooklyn and everywhere. Ding Dong's planning to pursue an initial public offering instead of a sale, but the company denied that report, saying it was premature to consider either a sale or an IPO.
Hundreds of entrepreneurs are at Walmart's headquarters hoping to sign a deal that would get their products on its shelves. And the world's largest retailer wants those products to be American-made. Courtney Reagan reports from Bentonville, Arkansas.
It's every small business's American dream.
Being able to pitch your product to the world's largest retailer, certainly for us who've just been in business just about 4 years, it would be, a business-changing event for us.
Today, the founders of Kettle Pizza got that chance. Their grill accessory for making wood-fired pizza is just one of thousands of products Walmart is considering adding as part of its pledge to buy $250 billion worth of made-in-the-USA product by 2023.
It's delight.
The duo hopes Kettle Pizza will be the next taco plate. At last year's open call event, Walmart ordered 1 million of them on the spot.
2.5 years into the effort, Walmart declines to quantify exactly how many Made in America products it sells or exactly how much closer it is to hitting that big target, other than to say it's right on track where it needs to be to hit the goal.
There's really 3 ways that we'll hit that $250 billion goal. One, this is a great example of finding new products that are made in the U.S. that aren't currently sold at Walmart or on Walmart.com. The second one is reshoring products, so making them closer to the point of consumption. And then the third is buying more of what we're already selling that's made in the U.S.
Jobs are another big part of it. The Boston Consulting Group estimates that 1 million new U.S. jobs will be created through Walmart's initiative. For the 6-person Kettle Pizza Company in Groveland, Massachusetts, creating American jobs was always mission number 1.
Jobs are important. It's a ripple effect for a family. And they know that they have, a steady income, and they can take personal pride in what they make, and that's very important to us.
So far, neither Walmart nor analysts can quantify a measurable sales impact from the Made in the USA initiative. While Consumer Reports says almost 8 in 10 American consumers would prefer to buy U.S.-made products over imported ones, it remains to be seen if actual buying follows stated intentions. But for Kettle Pizza, inking a deal with the world's largest retailer would be winning enough. For Nightly Business Report, I'm Courtney Reagan in Bentonville, Arkansas.
And late today, Walmart said it is working to get Kettle Pizza on Walmart.com as quickly as it can and says it expects to have the product in a small number of stores next spring.
Coming up, pirates do it, so do terrorists. Hostage-taking is big business for criminal organizations, but also for the experts trying to counter it. The first part of our series, Held Hostage, the big business of ransom, is next.
Here's what to watch for tomorrow. The Federal Reserve will release the minutes from its June meeting. It's the unofficial start of earnings season. Alcoa reports its quarterly results, and a gauge of demand for housing with a report on weekly mortgage applications. And that's what to watch for Wednesday.
All right, Sue, even hacking companies aren't immune to hacks. An Italian firm called Hacking Team that sells software allowing governments to hack into computers has become a victim of hacking itself. Files stolen from the company indicate it sold surveillance technology to dozens of countries, including Russia, Sudan, and the United States.
It is certainly not something any business or person ever wants to be involved in, but kidnappings are on the rise. According to the State Department, the majority of overseas kidnappings of U.S. citizens go unreported. And last year alone, more than 24 Americans working for companies were taken in terrorist incidents. Tonight, a rare glimpse into the companies responsible for rescuing and training people who find themselves in danger zones around the world. Eamon Javers has the first part of our series, Held Hostage, the big business of ransom.
Images like these would send chills down anyone's spine. And the more prevalent they are, the busier companies responsible for rescuing victims are becoming as well.
Our business has probably increased, I'd say, 40% year on year since we launched the business in 2013.
We got a glimpse into the many companies involved in kidnapping, ransom, and extortion right here in Washington, D.C.
Starting with someone like Michael Gnatic, a hostage insurance broker.
It's thinking of everything that could go wrong. That's how we get paid, is to think of what might go wrong. And to connect those organizations with the companies that can help finance that risk.
To help finance the risk, Michael advises his clients, which range from NGOs to multinational corporations, to purchase kidnap and ransom insurance.
It's an insurance policy that will provide for reimbursement of any losses that a company or a nonprofit organization has in the event of a kidnapping or extortion threat that involves a demand for a ransom.
Policies range from a few hundred to tens of thousands of dollars per year.
Olive Group is on retainer with us, and we pay for their services. That's where the most immediate payout goes.
Olive Group provides crisis consulting and hostage negotiating services.
we're advising a client on how to resolve the situation, how to speak to the kidnappers or the extortionists, how to maintain that dialogue, develop the negotiations, and then we remain with them through the duration of the case.
And before a company or NGO sends one of their employees to a potentially dangerous region, they must often take a simulated kidnapping training course like this.
We give them a little taste of what it might be like, and then hopefully they'll take those lessons forward if it happens for real. Business has increased massively in the last year, 12 months. It's gone crazy.
Pilgrims charges around $2,500 per person for a 2-day training course. Crisis consultants charge roughly $3,000 to $3,500 per day. And overall,
how much total ransom in all those thousands of cases is paid out every year?
It's roughly about a $2 billion a year industry.
$2 billion?
Mm-hmm.
That's a lot of money.
It is a lot of money.
And it's going to a lot of bad people.
It's all funding their criminal activities.
And these kinds of companies don't have to worry about going out of business anytime soon.
Kidnap for ransom is very much an ongoing and growing problem for the world. As such, I think we will have business for many years to come.
For Nightly Business Report, I'm Eamon Javers.
For more on the multi-billion-dollar business of kidnapping, head to NBR.com. And tomorrow, a rare look inside one of those simulated kidnapping training courses in the second part of our series, Held Hostage, the Big Business of Ransom. And that will do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks so much for watching.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll hope to see you right back here tomorrow night.